Hello there, welcome to the weekend video. This is Enda here, and I hope you had a good week. It's been horribly frustrating for me, but I hope you've had a good one. I've got my beer. It's a nice, smooth porter, so I hope you have something to match, something to kind of take off the edge on a Friday evening, Friday night. Well, it's 10 o'clock here. Okay, let's get down into it. I am going to do the usual. I'm going to go over the markets that I follow, those 9 markets, and we'll go from top to bottom and see what we can kind of glean from this week's action. Like I said, it's been a bit frustrating to watch a new high in the stock market, but I think this will be short-lived. Okay, so this is Eurodollar, and here we are again with a nice rally against the grain. I think today we'll get to that in the short-term count. But I still think that we've got a 1-2 pattern to the downside off a pretty heavy high there in wave 2. So long-term we're still solidly bearish on this. We've got a nice 5-wave pattern to the downside, and I think an expanded flat wave 2. Let's get in there. Excuse me. Yeah, I think we've got a nice 5-wave pattern into the low. I was iffy throughout the week whether this previous low here was wave 5 and we were wave 1 complete and we were working on wave 2, or whether that was just only wave 3 of 1 and this was wave 4. So the action over the last couple of days has cleared that up. We didn't in fact break support, but we got damn close. We have a nice 5-wave looking rally today, and we're pips off the 20 pips off the 50% retracement level with that single rally alone. So this could be an expanded flat. So you can see it's quite tight in there. Let's expand that out a bit. It could be that's the previous low there. That's 5 waves down, so you would expect that to be the low of wave 1, and then this expanded pattern, that expanded flat pattern, pushes up towards 50% retracement. So what we'd be looking for next week, we have been off the wave 2 high, looking for 5 waves down and 3 waves up. I thought we had that yesterday, but we didn't. I think we could have it now. But we'll have to wait and see. We'll have to see if we get a kind of a rejection at that 50% mark. Well, that gives us 114.30. So some sort of a rejection off 114.30 would be great. Nice impulsive spike lower again, maybe on Monday, to open up a 3rd wave down. So early next week we'd look for something similar to this, an impulse pattern off the high. To kind of lead the way lower. Okay, so that's Eurodollar. The outlook for next week is still the fact that the idea that we have an impulse, a larger degree impulse, complete off a wave 2, and we're looking for a 3rd wave down. And here comes my Barry White voice again. I'm gone 2 octaves lower already, or 1 octave lower. I drop an octave for every market. Okay. Pound dollar. Pound dollar has been on a tear this week. I have to admit I did not expect that. I expected it to follow the path of Eurodollar, and I had to switch the wave count back to an older alternate wave count. So this morass of action here over the last that's a pretty clear three wave pattern up. And we had a 3-wave pattern down and then a 5-wave move up. So I was thinking that this whole correction into the high in early November was a running flat wave 2, and then we moved down off that again in a yeah, it wasn't the best move lower, but I was counting it as wave 1 and this was wave 2. But we broke that high today. It took a while to do, and we invalidated that, or the market invalidated that outlook. Okay, so now what I'm working with is this whipsaw action here has, you know, until today, it never dawned on me that that could be a triangle. And I think, you know, look, hindsight is 2020, but looking back on it now, I think it's a pretty decent triangle. Now we have an A, B, C, D, and E, and all pretty much in 3 waves. It's hard to, you know, parse out 3 waves there, but the fact that they were followed by 3 waves is it's a good indicator. Why didn't you see that before, Enda? Well, you know, I'm only human. So 3 waves up in A, and we've got an A wave down, and a B wave triangle, and a C wave down in 3 waves, which again, you know, threw the cat amongst the pigeons, because we only got it was a low by an extra, or a new low on the 2nd of January by a couple of pips. So that kind of really kind of threw me for a loop for a while. So 3 waves down in A, triangle B, 3 waves down in C. So that makes this whole move most likely a triple combination, with this internal B wave being a combination wave itself. And we could be seeing another 3 wave move up in wave C. So triple combination, next impossible to track while it's ongoing. You'd be doing very well to make any money in there. So that's one consolation. Okay, so wave 2, you would expect to meet the previous, or wave C of 2, you would expect to meet the previous wave 1 high. So you'd be looking at 133 to complete wave 2, or wave C. Let's get into the hourly chart. I think you could probably track 3 waves up there. Again, it could be a triangle in here. A kind of, it's less than important at this moment in time. I think overall it's a 3 wave move up. That's the previous resistance there that we broke today. We're actually coming down off that again. I would like to say that if we got a sell off back into, or back below 130 again, definitely back below this previous B wave, so that's 126, so that's a fair bit down. But we seem to have a kind of a pivot level there around that internal B wave. We have a small high here, a pretty important low there, so that's kind of around 128. So we target 128 for wave 1 down. If the market turned lower below 130 again early next week, and we continue towards 128, well then, yeah, well that'd be again another signal that wave 2 is again complete. I still think it's a bloody mess of a correction. I think the longer term trend is lower, so we just got to get this out of the way and get a clear signal down. Okay, so dollar yen. I did alter this count through earlier on this week, and so far so good. Suffice to say, I think we've got wave 1 and 2, and we're probably on a wave 1-2 here again. So we're working on a 1-2-1-2 pattern again to the upside. And you can see this is probably a leading diagonal into wave 1 high, 3 waves down on wave 2. I switched this out to a triangle today. It's possible that it's triangle, or else we'll kind of see some sort of a flat pattern in a 4th wave. The alternate count, or yesterday's previous count, now becomes the alternate count. So, but at that, let's say it's probably a 50-50 at this stage now between the 2 short-term counts, because a breakdown below this 109.13 again would trigger that alternate count. So you've got a even more short-term bullish, actually, if you look at it that way. But for now, we're kind of holding within this kind of range contraction here. So I'm looking at a possible triangle wave 4. If we get a spike higher above 110 on the overnight and Sunday, well then that would pretty much confirm this new count here. And then next week would most likely be, you know, finish off wave 1 up and work on a correction in wave 2, and then we'd have a series of impulse waves up, which would point the way higher for the US dollar in general. Okay, so that's dollar yen. That's the man of the moment. It's the Dow You can see that we are diverging again in momentum. We've triple top and we've diverged lower on the 4-hour chart in momentum. We've got a new high today. We're still holding below that declining trend channel line. We've still got many worries to take into account. I still think that this is a 1-2-1-2 pattern. I think this is going to be the bull trap of the century. I mentioned that last week. I think it still stands. The idea that this market, the idea was suggested to me that earlier this week that this is just the beginning of a third wave up. I can't see that in my head because a third wave would require a monumental expansion in credit, and I don't think the carrying capacity is in the economy right now for a monumental expansion in credit. We will again see a monumental expansion in credit, but I think it's at far lower levels and in a few years' time. You know, around 2025 or 2030 or something, if we don't hit a world war before that. And there you go, we're probably hitting one of those war cycles again. So anyway, enough of that talk. This 1-2-1-2 pattern won't be broken until we break that 2660 level, or 26,100, whatever it is, up there. That wave too high. I don't think we'll get there. I think we're way overbought right now. Let's get out to the daily chart there for a moment. Oh yeah, we are right up at that. You could call it a triple top in over the last year on the daily. Approaching the 200 again on the daily chart, and we should see significant resistance there. Let's get down to the hourly chart. I still think this counts as a three-wave pattern. That breakout today was invalidated the idea that this was the initial move down, so it's most likely a triangle, and then actually if you move in there, you could probably see 5 waves up. So out of a triangle, 5 waves up out of a triangle says to me that this is the end of the triangle is the penultimate move. This is the final move, and again, you know, my outlook remains the same, looking for an impulse pattern off the final high of wave 2 to the downside. You know, I do get a lot of slack, and fair enough. It's not the easiest in the world to track, you know, to make prognostications for 5 years out, tracking a data, you know, the chart on an hourly, day-to-day basis. But in saying that, I can still see only one direction for me right now. You can call me single-minded, perma-bear, whatever you want. People have called me worse. But for now, I think this trend will change. This short-term upswing will change, and I think it will catch everybody out. As we move down into wave 3 next week, we're just going to have to be patient again. We have those that band of kind of support that we're looking at there. That previous 4th waves, that A wave high as well, that 23,000, but we're a long way before hitting that 23,000 yet. But I think that wave 1 down should probably bring us down below 24,000 again. Yeah, maybe even hit the upper 23s. We will see. Waiting patiently here. And I was looking for gold to break out of this flat correction here, and we did that today. It was a nice spike higher in a nice 3rd wave. So within that 3rd wave, we could probably see 1, 2, 3, 4, 5, or that could again be a 3rd wave extension within a 3rd wave. So it's nice to see we're back above 1300 again. So the wave count was proved correct here as a correction in a 4th wave. Let's actually get out to, I didn't do the 4-hour chart there. gold 4-hour chart. There was an argument. There was an argument in my mind. There's lots of arguments in my mind, but there is an argument in my mind, or an argument that this correction here is commensurate with that previous second wave correction. So you could call that a simple zigzag. You could call this a nice flat with an internal triangle. So you've got alteration. So you could have the wave 3 high here, and this recent low being the wave 4 low. Not sure what to make of that just yet. It kind of depends on how this rally goes from here, but suffice to say, if that's correct, well then I think we could see even more upside in the short term, maybe even a 1400 level, as wave 5 in blue breaks, or if it's wave 5 blue that we're actually tracking right now. But for now, I'm still looking towards that upper trend line there at about 1325, 1330 to complete a possible wave 3, and then if we hit that trend line, then we'll work from there. I mean, if we blast through that trend line, I'll probably move to that alternate count and call that wave 3, this wave 4, and then we're moving up in wave 5, and that could lead the way to significantly higher in gold. Okay, so here's crude oil. We're right back at that wave 2, previous wave 4 triangle high, and we've kind of been bouncing up against it for the last week or so, which indicates to me that, you know, the steam has run out of this rally already. And I mentioned to you yesterday, I think it was, I just lubricate my throat there. Yesterday I saw that almost laughable comment or article on CNBC about $90 oil. So I think the headline was, we're more likely to see $90 oil than $40 oil this year. The funny thing is we're far closer to $40 oil than we are near to $90 oil. So we're like $40 off $90 oil, and we're like $13 off $40 oil. So yeah, make of that what you will. I'm kind of calling it the bullish expression at the end of a second wave. So you could probably even measure the bullishness that's on display, or that's being let's say spouted at this wave 2 high as even more bullish than what was spouted at the previous wave 5 high, or sorry, wave 4 high. Long term, we're still looking lower. We may have wave 2 complete, or and the alternate count, it could be wave A of wave 2. So both wave counts in the short term are pointing lower in a possible wave 1 down or a B wave down. So that's what we're working on next week, to see if we get another impulse signal to the downside for the long term lower trend again. Okay, so let's move on from crude oil, and I think I've dropped another octave. Soon enough I'll have to use like auto tune or something to bring my voice up so that people can actually hear me. The SP did not confirm the breakout in the Dow today, so that's a little bit of a strange one. We have again the same kind of situation, I think, in the S&P. There's probably no point in repeating it. The same long-term indicators are flashing red. We have a triple top in momentum at a wave 2 high. We have a downward sloping trend line in place, and I think we have pretty weak price action in general around this top. So most likely I'm going with the idea that we have a 1-2 down. If we see a spike lower on Monday, then that will kind of confirm that. So we need to see a drop towards 2600 again early next week to see to call that a wave 3 down. and we're just kind of waiting. I'm waiting patiently to get that larger degree impulse wave down, and that should lead the way for a nice opportunity on the short side. Okay, let's get on to silver. There's the 4-hour chart in silver. Looking for a pop higher in silver this week. We got that move today. You have to be just kind of ended up having to be very patient with the metals over the last few weeks, but it seems to have come back into its own today, and it's most likely that we have a 1, 2, 3 pattern again in a fifth wave of wave 1 up. I'm not as convinced that the previous high is wave 1. I think we still have to complete wave 1 for silver. So if that's the case, then we're looking for at least short-term upside up to, I think it was about 1560 or 15 upper trend line, maybe about 1540 to 1550, that kind of area for wave 1 to complete. We got a decent way of the way to today, so another 70 cent or something on an ounce will bring us up there. It would be quite a move, but again, fifth wave up would merit that sort of action. I think the 1637 was where wave 5 reached equality with wave 1. So, and the minimum target would be for a break of the previous wave 3 high. So we've got 1586 up to 1640 or 1650. It's a wide enough range, but I think a continuation of this 5-wave move would bring us right up into that band. Maybe a break of 16 would be the first indicator that, you know, we're coming to the end of that move up. If that's wave 1, then we'd expect a 3-wave move in wave 2 with initial support back at that 1517 level. So that's the outlook for next week, because I think it's continued upside. We'll see where that upper trend line kind of takes us after that. And of course I switched off my Admiral Markets account and we're back on. Okay, so I think we're looking at this is the 10-year. Again, in the 4-hour chart, I'm looking at a pretty significant high and a possible second wave, and we're moving down nicely off that right now. The idea is that we've got a 1-2-1-2 pattern here. So far that's been proved pretty correct with the 3-wave corrective high. We hit that kind of upper trend line target and we move lower again, but we would be looking for a break of 121.05. I'm saying a lot of we here. I am looking for a break of that 121.05 level again, to complete or to confirm that as a 3-wave move and give us an indicator that wave 3 of 3 possibly to the downside is underway. But for now we're looking pretty bearish on the 10-year, and like I said in tonight's update, this could even be bullish for the shorter end of the curve, and it would most likely be a signal that we'll start getting rate cuts pretty quickly out of the Fed, especially if we see another move down in the stock market. But I think if you see the 3-month yield beginning to drop again, that'll kind of lead the way for the Fed funds rate anyway. So they pretty much follow that. There's isn't really much decision making in it at all. It's just, where's the 3-month yield at? Okay, let's follow that. Okay, so we seem to have a 3-wave correction in place in wave 2, and next week I'm looking for kind of a further acceleration lower, a break of support, and a confirmation of a 3rd wave down. And actually that is me. 9 markets. I kind of spilled through that very quickly and I didn't even finish my drink. Lucky for you, because I would have been just slurring my words then. Okay, thanks so much for being with me during the week. I know it's been frustrating, probably to say the least. I'm with you on that one. But next week we will. I'm keeping an open mind, and like was mentioned to me, and I mentioned to everybody, the job in the market is most likely to fool as many people as possible for as long as possible, and it's doing that very well these days. I think the next move will be the biggest surprise that people will get in 2019. Okay, have a great weekend. God bless. Have a good one. Don't do anything I wouldn't do. Bye bye.